Hello and welcome back to another YouTube video. Today we're going to go over setting budgets 2.2.4. All I ask for is a subscribe and like and share with any of your friends who are studying the A-level business course. So a budget forecasts future earnings and future spendings, and there are three types. You have the income budget, which forecasts the amount of money that will come into the business as revenue over a period of time. You then have expenditure budget, which predicts the business total cost for a period of time. And then profit budget, which calculates the expected profit, and you just do that by income budget minus the expenditure budget. Remember those 3 or 4 definitions. You should definitely have those for the exam. And I'm going to just quickly talk about the things in the blue writing. They're not likely to come up in the exam, but just be aware of these things. So the expenditure budget is usually broken down into different department budgets, such as marketing budget, stuff like that. They spend it for themselves. The income budget, firms research how sales will rise and fall. And also with the expenditure budget, firms look at how labour costs, raw materials, taxes and inflation will affect the firm's cost. And the budgets usually need to be realistic and be on set to meet the objectives of the firm. So just take those things into account in the blue writing. You don't have to necessarily remember them. But now looking at the pros and cons of the budget, which you do need to remember. Obviously a pro, it can be motivating to work towards a goal. In addition, there may be more communication between employees, which leads to more teamwork and meets Maslow's social needs. Now we're thinking back to the past few videos. And also another advantage, it could persuade investors that a business will be successful, so it's more likely to gain investments, showing that you have control of your finances and knowing where everything's going to be. However, disadvantage, that budgeting can cause resentment and rivalry if departments have to compete for money. Also, factors like inflation and interest rates, they're hard to predict, so therefore making decisions about the expenditure budget may be inaccurate. So from this page, just remember the 4 definitions in the white boxes and the pros and cons of budgets, and that should be good for the exam. And then you could read over the blue thing a little bit. Now this is the last slide. Let's look at historical budgeting. This is when this year's budget is based on a percentage increase or decrease of last year's budget. It's quick and simple to do. However, it assumes that business conditions stay unchanged, which means the budget may be inaccurate and the business can make wrong decisions. For example, let's say COVID, you kept your budget the same, everything, and then COVID hit. That's a big change. Then you've got zero-based budgeting. This is when the budget starts from scratch each year. So the budget holders usually have to negotiate and get approval to spend money on activities from like board of directors and that. If zero-based budgeting is done correctly, it can be very accurate. However, it may be time-consuming and a bit difficult to do as of restarting everything and planning everything out. Alongside those two, you have fixed and flexible budgeting. Fixed budgeting means the budget holders stick to the budget plans throughout the year, even if the market conditions change. So they spend this much on marketing, this much on their employees. They don't change at all. So this provides discipline and certainty. So it helps control your cash flow. You know where everything is definitely going. However, you can't respond to opportunities or threats in the market. Then flexible budgeting allows budgets to be altered in response to significant changes in the market or the economy. So the firm can respond to changes in the market and take advantage of opportunities or respond to threats. However, it's less control over the cash flow because it's not certain. Sometimes you may spend more or less on something. So from this slide, I'll generally say remember all the definitions, basically everything on here, the pros and cons. But that's it for today's video, just those 2 slides. All I ask for is a subscribe and like, and hopefully you can share with your friends that do A-level business. And also if you're someone just wants to start a business and gets the basics, this is also helpful. And lastly, before I go, as I always say, I just give you the points and you revise yourself. I don't like to waste your time, as I know you don't want to be watching loads and loads of videos of revision.